The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we like to come to you at this time.
Following takes place between 2 p.m. and 3 p.m.
He's a little early on the draw today, wasn't he? Just a little early. Okay, so what do we have? We're up 8 points on the S&P cash, up 98 on the Dow. NASDAQ's up 19. We had, or at least I had in the newsletter this morning, kind of a spike where I thought that the S&P had about 0.4% higher on both the NASDAQ and the S&P. We got there. NASDAQ, I think, got 0.5%, and so did the S&P. We're up about 0.3% now. Today, I suspect we probably are fairly close to the high for the week. That doesn't mean where you've got a huge sell-off coming before Friday. The markets tend to have a big change of character when you come back from 3-day weekends, which we will have. So we'll off, what? Man, we got 3 days this week. So what else do we have happening there? Well, the question is, are we going to see a change in the market before the close on Friday or on Tuesday? I keep on trying to think about showing the options charts for the week, and I will do that in the start of the second session. I just keep forgetting by the time I get going. I get into a groove. I get pretty focused. I don't see a lot. I got kind of blinders on, a little tunnel vision when it comes to doing the show. But this is the option market makers started earlier in this week. But man, they don't have much of the way of the risk or up or down. They expect some kind of bombshell or some kind of great news, but they don't know which one. They are so far out of putting on any risk whatsoever that it was kind of hard to actually find a position to take in options. I did find one just because literally it was almost a free roll the way I looked at it. And it was also one of the weakest sectors that I could find. So I did add a put today into March, but pretty low price of admission. So it's one of those things which is almost a lottery ticket. But you got to wonder when someone prices something with a 0 chance of failure, if that isn't the best ticket to ever buy, because nothing works 100% of the time. Anyway, we go back to that. We didn't have much in the way of volume yesterday. We talked about it. Got to about 7 billion shares, but man, we needed about 10 back into this move down, or we're going to stand and go sideways for a long time if we have to chew through overhead resistance. Right now, we've got 4.1 billion shares in the CBOE U.S. market equities, which is good, a little bit better ahead of yesterday. But again, this is in the last kind of hour, we've had a big fade of volume and kind of exactly what we had yesterday. Anyway, the pattern for options expiration is if today's up, tomorrow's down a little bit, then we come back and retest the high of today on Friday. Now the question is everybody going to say, okay, very light volume going on a 3-day weekend, maybe Friday's the time to take a look at a short position. Maybe Tuesday's a time to look for a short position in the equities. But certainly when we get back next Tuesday, let me get it here. When we get back on the 19th, you've got 1, 2, 3, 4, 5, 6, 7, probably 8 days before fund buying comes in. Earnings are almost all gone. So what's going to be the catalyst for a higher or lower market? There's not a lot out there. The only thing that we have after the bell tonight that really seems to maybe perk up the ears a little bit in the indexes is Cisco. A lot of also run stocks to MGM after the bell, but again, not going to move the market. Yelp, Intap, CenturyLink, Marathon Oil. I mean, some of these can give on the edges some movement, but there's just not a lot there. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And of course, you can always put a message in the den. And I think we've already got email on the way, but not much going on. Oh, we got time for some history? I think so.
Then it's all just a little bit of history repeating.
History repeating it on this day in 1945. The most controversial episode in the Allied War against Germany begins as hundreds of British bombers loaded with incendiaries and high explosive bombs descend on Dresden. This historic city, been around for 2,000 years, located in East Germany. I've been there. Dresden was neither a war production facility nor a major industrial center, and therefore the massive air raid of February 1945 really wasn't expected. It had not suffered any major Allied attacks. It had seen some people kind of drive-by shootings if they didn't have bombs or missed on some of the nearby production facilities. By February 15, the city was a smoldering ruin, and the unknown number of civilians, somewhere between 135,000, were dead. I think I've actually seen some documentation that says it's probably more like about 80,000. And this was in the backdrop, of course, of a great deal of what's going on in England at the time, which is them shooting the V rockets and the buzz bombs at them intermittently. And it seems like there's just not that much in the way of retribution. Of course, we did the same thing kind of with Tokyo and kind of a payback for all kinds of various things and atrocities. But in World War II, and we were nice until we weren't. But that's the way all wars go. Now, well, hopefully you didn't lose my video. It says that you lost my audio, video. Well, my audio is still fine. I did lose your video. I don't know why. Why is that? No device found. My camera died. I see that. We'll get that fixed during the break. And of course, well, we got lots of charts to look at in the next segment. We'll get reset up here and move along after this.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And the first chart I want to look at here is the Intel options curve for expiration on Friday. Basically, you've got less than $1 million at risk, all the way from $44 all the way to $55. That's probably more like, I think that it's a little bit more money than that. I think the CBOE files, I'll have to dig into them, but the curve is correct. The dollar amount, I think, is a little wrong. I'll have to go back and look at it. I think there's a little bit more million than $1 million out here. But what you want, it's probably 10 million all the way up to that first level. They may have pulled the zero from it for some reason. I think you have to look in the headers now for it. But the curve is correct. But basically, they don't want exposure in Intel from $5 up to $5 down for what? 3 days away. So that tells you a little bit that they don't think this deal is a done deal, and they don't think, or it could be, and they don't know whether or not the trade deal is going to blow up in everybody's faces or be signed. They, after getting shellacked, I think that's a technical term, over probably about 4 months, everything since about 1st of October last year, they've just been creamed. They continue to pull back any kind of exposure in the option markets. And of course, what do you need? You need exposure in the option markets. But if anything bad would happen, there's just not that much of it. We see the same kind of thing in the put call ratios yesterday, fairly low in the equities. So, not uncommon on a little bounce like we had yesterday. But again, there isn't a lot of fear. So Mr. Powell has got his Powell option put on the market. But at that time, no one's really paying attention to it. They're saying, you know what? We're just not going to, as option market makers, we're probably close to being broke now. And we're just not putting much in the way of anything close to being in the money. The way I looked at it last night on Intel, 1 out of 90 expiration dates would these ever get into the money. So, you're basically down at 44 bucks and up to 55 bucks. So actually almost 11 bucks spread out here like it was going into earnings, and it is not. That tells you a great deal about what the people on Wall Street actually believe. And we'll take a look at the S&P cash. Remember, give me a call, 877-927-6648, or email me at path@tfnn.com. No, it's kind of a quiet day here after the open. The other one I wanted to look at here was the SPY, and we'll look at that. We had about double the exposure come in yesterday to the upside, but for what we've got now, that's about it. We're basically at the level where you have to get down to the SPYs would have to drop 25 points for them to actually start even getting in the money. They have stepped away so badly on those overall. So, there's some spreads in these, but when you look at the net of option writers, which is what this is, 85% of those option writers are Wall Street folk. Only about 15% come from retail traders and or hedge funds. In fact, the biggest options expiration or options writing company in the world is from Buffett. He basically writes all the options on his own stocks and makes a small bundle on them. It's nice when you can control the news and let the people in your own business know what's going on. If you always knew what the dice were going to roll, always interesting. Sometimes there's some things you can't control, like news, but if it's news from the company, they ain't going to say anything until everybody inside the company knows and has a chance to amscray Attenlay, if you know what I mean. So that's it. There is nothing out here that says, other than the fact that they started adding, or we went to about $1 billion to the upside at 300 points from about 500 million yesterday. So there's just not that much in the way of cash at risk. There'd have to be something amazing happen before a lot of this stuff actually pays off. But again, on the put side, you have to go down 20 points, more than that, 22 points on the SPYs. And I don't think anybody is forecasting that in the next couple of days. So you have a lot of downside risks that came from the plunges. A lot of people still wanted it, but it's just gone out there, keeps expiring over on the left-hand side of this chart and tells you one thing, and that is no one wants a lot of downside risk unless it's almost impossible. And that's what they've what's out there right now. Unless some kind of meteor hits the planet, the chances of those puts, for the most of the puts coming in, at least on the SPYs, is infinitesimal. That's another technical word in trading. So don't expect a lot. I think we're kind of stuck up here at the highs. As I said earlier in the first segment, I'm thinking that we have a pretty traditional expiration, which is up today, little pullback tomorrow, retest of the highs on Friday, and the question is whether or not, if the volume remains as light, how many people are actually going to probably try to short the close on Friday and or try it on Tuesday. Maybe there's some kind of news that comes out. Certainly, easiest thing to do is not get in the way of a roll of the dice over the weekend. But Tuesday, when you come back, question is whether or not you gap up or gap down on some kind of news. So kind of tough. Anyway, we've got some stocks giving some fairly interesting signals. We're going to go through as many of those as we can. And again, you can always give me a call at 877-927-6648. Almost out of time here. When we do look at the price of Intel and look at the options, my guess is that you're going to just see everybody try to pin these stocks on Friday at the closest strike price. For Intel and the very light volume we have today, going into 32 million shares today with 10 million shares so far, I suspect that they just pin a lot of these right at their expiration. That's probably going to be $50 on Intel. When we look at Apple, most of the week it's looked like these guys want to pin Apple at 170 for expiration on Friday. You got up a little higher today with 14.8 million shares. When you go back to the down day of the 7th, just a handful of days ago, that was down on almost 32 million shares. So we're back up into that candle on half the volume. My guess, sideways and flat. Look for a 170 expiration unless we get some kind of giant news article or snooze article.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we got, what else do we have here? Oh, we want to look at some of these. Where's I find all my stuff here. Got to move it around a little bit. Always get to, what else do we have? Oh, anyway, Oh, okay. I'll get my head back in the game here. After the bell tonight, CSCO, Cisco, which been going up, probably mostly on the fact that we're making sure that the Chinese don't have any ability to flood the market with their cheap riff-offs, which certainly they've copied almost everything from Cisco, including code and hardware designs. So they can make them a lot cheaper, but did it get signed? I think it got signed did it this week? I'm going to have to check. But certainly looked like they were going to sign or actually make a bill to keep Huawei out of any communications, including the rest of all Chinese communications. They just can't slap a new name on it and put it out there. But certainly it does look like there's something happening in that sector. So, you know what? That being said, Cisco has one of the worst looking charts, at least for energy, back off the bottom. You had a small bounce, like most stocks, off to December 24th, pulled back into that candle on January 3rd with more volume. It's been slowly moving up. There hasn't really been much of the way of any energy. It hasn't quite tested this December 4th high, but that December 4th high had 31 bucks. And it yesterday you had 24 million shares, so you're about 6 million shares light. If this does outperform tonight on earnings, then you're probably going to see the December 4th high hit. So maybe you got a buck to the upside, and if you disappoint, maybe you got 45 to the downside. So risk reward just does not look that good. And you know, if the energy was better on the way up, then I would have probably thought maybe there's more than the previous high in this, but I'm going to say 85% of all the stocks have gone to previous highs and either rolled over or stayed. Only probably 15, maybe 20% at the high. So actually broken out after being so close to those particular highs. What else do we have? ACIW, ACI Worldwide, challenging the previous 3 million share high at $30.25, the November 9th high there, $30.25. Got into it 2 days ago with 570,000 shares. You got a doji yesterday, you got a doji today. Doji on today is on very light volume, maybe half of yesterday's volume. And of course, 1/10 of that volume on the November 9th high. So there are some stocks out here. What else do we have? Adobe Systems. You had a nice high at 260.72. The December 3rd high, 4.3 million shares. Yesterday you had 2.5 million shares. Today you got 1.1 million shares. As you went over that particular high, looks like you could close below that particular high. Again, energy on the way down. You probably can't see these real clearly, but a 6 on the way down on a power law vector indicator, a 4 on the way up. So they're just slow and steady, but not a lot of juice back up to the previous highs. Another stock banging at the top of its range with a little lighter, not as bad as Adobe, but automatic data processing up at this October 3rd high, 153.51. Certainly have that with about the same amount of volume. Of course, you're going and you went through that 150 high that had 4 million shares going back to December 3rd. But, you know, the big one I think you're looking at is the October 10th big candle where this thing fell apart and where resistance has been before. Came down on about 2.9 million shares, and 1.2, 1.3 is just not that much. AKBA, don't see much in that. We're just going to go through these as many as we can today. I got 3 minutes left. What else do we have here? Okay, Crombie and Fitch, we talked about this one yesterday, testing the high of November 29th, $22.17. 27 million shares got into it yesterday with 1.4 million shares. Today down on 1 million shares, so not a massive rejection. But again, almost all the charts out here kind of look like this. You have your high, somewhere early December, your low somewhere around December 24th to 29th. Your highs back here in the last couple of days with no juice. This one down, that much. But I mean, you got 27 million shares there going up against 1.35 from yesterday. There just isn't a comparison, at least at these highs. Now, if they're hanging there for earnings, that's one thing, but you just never know on some of those. Anadarko Petroleum, we were watching this one to see whether it was bouncing off its lows, and probably bounces up and retests this February 8th low. You got a little bit of juice in this one today, 9.2 million shares as we talk, which is not bad. You still had more volume on the way down, 12 million shares. So you might be able to get to that. Actually, if you did, and you got another pullback to the lows on light volume, maybe in the next week or so, these companies may be interesting in that sector. Accuray Incorporated, A-Ray is the symbol on this one. $5.30 high on November 7th with 2.4 million shares. Got into it yesterday with 1.33 million shares. Did go over it by 3 cents, closed below it, and gave it all back up to $5. And again, not as bad as looking at some of the other ones for the energy on the way back up, but certainly no volume yesterday. A lot of these stocks that are right around $5 are finding that they're going to be right at $5 come Friday, I suspect. We're up 9.7 on the S&P cash, up 108 on the Dow. Nasdaq's up 22, and the Russell up 3. Kind of the weakest of the bunch today. Okay, AVEO. Not something I want to look at. Avon Products back from the dead, but not that much. Last major high was February 4th at $2.82, 20 million shares. Today you're doing 8 as you break through that high. You want to see how that one closes today. AWK, which is American Waterworks. We've been talking about this one for a while. Energy's off about 30% on this leg off the December 26th low. And what else? 1.5 million share high tested yesterday with less than 700,000. So you get what you get. We'll be back in a minute.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And what else do we have going on? Well, certainly a lot of movement in some stocks, not so much others. Question coming in about MU. I don't know. Everything I see says it's kind of tricky to think that MU is really breaking out. You've got 35 million shares today, which is certainly higher than the November 8th high. So are the semis going to roll over here? I've heard somebody bringing that up today. And for me, I don't know. I don't see any evidence when I look at all the newspapers from Taiwan, which generally have some fairly good articles about pricing on memory. Maybe there's something else going on behind the company that I do not know. Energy's not that bad, so it's not like it's something I'd be shorting at here. But again, this seems rather pressed. Let's take a look at the SMHs. They've actually sent and held up fairly well. You're back up to this gap that goes back to the 8th of October in the SMHs. Again, you've had pushes, but you got no volume, which is the real problem. Came down on 9 million shares. Today you got 2.3 million shares so far. Yesterday, 5.7. So you're running out of gas fairly quickly up at these levels. I don't know if you have a big pullback coming, but I think 95 probably would be out of the scope of a decent pullback just on the basis of the incredibly light volume in these throughout the rest of the week. Now, could this creep up even a little bit more? It could if people continue to short this thing into Friday. My guess, though, is that the break will come probably Tuesday or Wednesday in it next week. To AutoZone, get to it. Another one testing its previous high. That high had 931,000 shares on December 11th, 896.03. Tested it yesterday with 362,000 shares, going a little sideways today, 133,000 shares. Not probably the most bearish of charts, but certainly no volume up at the highs. A lot of them came up with no energy. That one did a little better than most. Let's see what else we have. Beckinson or Belden, cable manufacturer, not bad. Hitting previous highs on November 8th and November 19th. First one had 930,000 shares. Next one, 620,000 shares. Today or yesterday, you hit it with 400,000 shares. Today, you got 300,000 shares. You're going above those highs. Looks like you could close back underneath them and give a valid sell signal on that. What else do we have? Okay, another one, which is that one. We'll go ahead and go through. Find some other ones that are out here. Brent Funds, Brady. Don't know what this one does. We will find out. Brady testing the November 14th high. That's $47.14 with 600,000 shares. Yesterday, he had 239,000 shares. Today, 235. Let's take a look at that one real quick. See what she does. To manufacture supplies, identification solutions, and workplace safety products to identify and protect premises, products, and people in the United States. Out of Milwaukee, made beer famous, apparently, if you believe the ads. Certainly another one out there with very light volume. BRKL, Brookline. I don't see much in that one. Peabody Energy. So we said some of these look like maybe they could start to find some kind of lows just on light volume, but certainly this one had twice as much volume, down at $29 on December 26th, or had actually twice as much volume on February 11th as that previous low. So none of these things in the nat gas area look all that exciting. Boston Properties, we talked about how these things have got up to these highs and had fairly light volume. 1.3 million shares on the December 4th high, 132.73 on Boston Properties. Today, 272,000 shares. Not really backing away, but certainly no volume in these things. CAL, Calmine Foods, been bouncing around these lows. I don't know if you can make a lot out of that one. Colgate Palmolive has been banging around this $65 range, which has been multiple times turning points in CL. What do you got? 6 million shares, 5 million shares in December 13th yesterday, and about 4.5 million shares. So not a great signal, but the energy not all that exciting in that one. CLI, don't see much in that one. Don't see much in Cheetah Mobile. Chimerex, that one. Or Mark. There's a lot of stocks out here. Carrizo Oil and Gas is off the lows. You did pull back, but you had more volume. All these energy stocks do look like they did have more volume on these pullbacks, so you're probably still looking for one more pullback in crude to set up some kind of low. Let's see if we go to 1 year. Nothing on that one. Clear Bridge, CRVV, Columbia Property Trust. Again, these REITs kind of look rather interesting on light volume. This one actually had a little bit more volume, one of the few. Columbia Property Trust, CXP is the signal, or on the is the symbol on this one. You got about 100,000 shares more than the November 7th high at 22.78. Energy was about the same though on the way up and down. Just probably the best house in a bad neighborhood for most of these. Diebold did pop up today on some fairly decent volume, but again, you're probably getting ready to run right into the gap down. Was at about $8 back on, what was that, August 1st? Yeah, August 1st. So you got maybe another 30 or 40 cents before you run into the supply line. But I guess the sale of ATMs continues on. But you don't know. John Deere, they were yakking about this one earlier before the bell. Doesn't seem like actually much happened. I think we brought this up yesterday on light volume. 5 million shares on December 3rd high at 164.37. Got into it with 4 million shares on January 18th, 166.19, pulled back. Got into it yesterday with February 12th at 165.91 with 3 million shares. So again, you continue to bang away at these highs on light, semi-lighter volume. I guess we've got to say it that way. Let's check back in. We're up 12 points on the S&P cash, 140 on the Dow, Nasdaq's up 31, and the Russell is up a little less than 4. Still not much action going on in that. We got one more segment. Give me a call, 877-927-6648.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're coming up here to the end of the show. Probably won't get your call in, but we can look at a few more charts. Dollar General, 2.25 million shares on November 8th, 118.45. As I said, 2.25 million shares into it today with half that volume so far, 1.25 million shares. Now, let's say you end up with 1.5, 1.7 million shares. Still going to be a little bit light on this one. Certainly, the energy is just been very light on most of the way back up here. DHR, which is Dana. And on this one, we are seeing, what are we seeing here? You're just banging at this 110 level. You did so on 4.5 million shares back on December 3rd, yesterday on 1.7 million shares, today on 1.44 so far. Not as bad as some of the others, but again, this is energy up off these legs anywhere from December 24th to the early week of January when some of these pulled back a little bit and did so. This one basically pulled back on the same kind of energy volume that we saw back on December 24th. So not a rousing endorsement. Certainly the energy has been light. Some of the days, down days have been fairly strong. We continue to kind of creep up with the rest of the market, but not a lot of signals in that one that say that's it. Again, after the bell tonight, we've got Cisco. And do we have anything else I really wanted to look at? Yelp. Yelp kind of started moving up after Snap had a fairly decent reporting period. But man, you're going back into this gap of the 9th of November. That had 25 million shares down yesterday, 1.7 million shares today, 2 million. But tough road. We will be back tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.